we can only do leases as we are regulated under the so-called German Investment Act. I've seen over the years always been basically propaganda towards management contracts, but I don't see that this is really the truth. I don't really see the trend going towards management agreement, particularly on the continent. There is, of course, capital which is chasing also management agreements, but at the contrary, now we are going to the US and doing lease agreements, and therefore I don't really see that there is a trend towards management agreements. You differentiate through franchise. That's and you can combine it with lease or management, but in principle, yeah, I think there is space for everybody.
Can I just add something on this? Because I mean, I've been involved in this since '87 when I started in the US. And the interesting thing is, it's really helpful to get a historical perspective, because effectively, management contracts were invented by American hotel groups, and they were invented by people like Marriott, Hilton, etc. For what end? To accelerate growth in order without except tying down capital. Now, obviously that's in the interest of hotel groups. Now, the interesting thing is whenever hotel groups were really strategically interested in anything, they always did other deals. They guaranteed income under management contracts, they took a stake. Whilst they had a management contract, they did leases, they bought, they did anything that got the deal done if it was strategic. So that is a really important consideration. Now, I agree with Andreas in the sense that a management contract is still going to continue to be very much favored by hotel groups, but they have a number of very significant disadvantages. One, from an investor's perspective, they don't represent any commitment. Two, more and more investors want that commitment. And so I think, and the other thing is also management contracts. When you look at a Marriott management contract or Hilton, they're ridiculous. I mean, they're literally ridiculous. They're for 30 years. They have two renewal options for 20 years each. Basically, you have to pay 6 to 7, 8% of revenue to them without any financial commitment, if you add it all up.
10, 11, 12?
But anyway, it is really, and then they impose on you quality standards which might not actually generate profits for you. One of the reasons why effectively a lot of new brands have emerged is because management contracts are about branding, and hotel groups have more and more become distribution companies and marketing organizations than actually hotel operators. And so they have oftentimes forced on hotel investors to make investments which are not even profitable. I mean, I have a brother who's a general manager. I'm not going to say the hotel group, the name of the hotel group, but I often have discussions about the kind of stuff he has to do, which actually is not making money for him, but is imposed because it does represent some stories. I can tell you one story without even also telling you which hotel group it was. There's a hotel group which has a cookie warmer as part of its requirement. And I had a closing for a 40 million deal, which was delayed because a cookie warmer hadn't been delivered. And since it was a critical thing to comply with franchising standard, that bloody cookie warmer cost $200. Peanuts, 40 million closing. So effectively, management contracts have led sometimes to things where the investor is really strangulated. And so I think that therefore there's pressure, other things emerge, and it has become a little bit of a loop-sided agreement. 20 years ago, it was exactly the same. Over time, it always is the same. The pendulum goes back and forth between more investor-friendly or more hotel group-friendly. Anyway, so...
Let me just say that I think you're all wrong.
Is it that a cookie warmer is that important?
No, it's not so much that as it is, if you, again, you had 6 big public hotel companies, it's now 4. In Europe, you have a lot of smattering of smaller hotel operators, and of course, leasing has always been the practice here, but much like Asia that got swept over by management contracts, the 4 and what will ultimately be the 3 public hotel companies who are going to be larger and more dominating, they're not going to invest in real estate, they're not going to guarantee income. I've probably negotiated 1,000 management contracts around the world. 5 have been leases, and maybe 2 in 28 years in the U.S. And the U.S. hotel brands are not going to give up. They're going to continue hammering away at Europe to try to convert it more and more so to if not to a managed, to a franchised.
Because I think
To a franchise
that's where the real difference comes in.
setting.
I think it eventually become all franchises, and then it depends on the investor whether you have a, call it more passive investor or more regulatory driven investor like Andreas, or a more active investor like myself or like Keith, right? You take a lease if you're the more passive investor. If you're a more active investor and you have all the third-party operators, right? That yes, in theory it's a management agreement, but actually what it is, it's a short-term kind of agreement to manage the asset until you kind of sell it on, right? That I think will continue. I think the historical 30-year management agreement with the brand, I don't see it.
Especially if it becomes a franchise. But I mean, just one thing. I mean, every hotel group on the Sun signs leases. Whatever they say in public, I've done.
That's
I mean,
the point.
with every hotel group. So it's purely driven by interest
And leverage.
and
How
negotiation
badly they
level,
want
how
a
strategic
particular
something
city
is.
and that
Exactly.
site at that time and that location.
Exactly. And the other thing which
That's
is
what
really
does it.
important is that the more hotel groups have moved towards franchising distribution, the more they lose credibility as hotel operators, because effectively they move more and more away from an expertise and understanding of real estate. I'm not going to say the name of the hotel group, but it's a big one again, who recently, because we are on one of our hotels, we wanted to consider extending a hotel and adding an additional 3-star hotel. They ask us how much it would cost to build their hotel. And I said, are you bloody joking?
Yeah.
And effectively that reflected the fact that they didn't know what their own 3-star brand would cost. And even though they have built 300 of them. So that is really undermining their credibility in the whole relationship. And so as they become more and more focused on the distribution side, competing with OTAs, etc., they become less and less credible as a real estate player and as an operating player.
Yeah.
Anyway.
Maybe one important factor, nevertheless, to
forever about
add
this.
for the lease agreement, if you look at lease agreements like 10 or 15 years ago, people were just signing them and putting it into the drawer and lay down and then wake up. What is happening here 20 years later? So this has really changed. Lease agreement from our point of view are really sophisticated. You've got waterfall system, you've got FF&E control, and all these sort of things. We of course are less active than you are, Eric, but still I think they have been changed tremendously and have many elements of a management agreement, even though the controlling or the managerial part is not as strong as in the management agreement itself.